All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, my quant, Glenn.
Sans glasses today.
Yeah, where are your glasses at?
Eyes are feeling good, so contacts back in. Sorry to disappoint.
You weren't too drunk Tuesday night and didn't sleep in them, I hear.
No, it was Christmas Eve, Ryan. It was today's Fed Day.
Yes, that's true.
Could barely sleep.
Understandably.
What a dopamine rush that was.
Yes, of course. Glenn, I don't know if you know this or not, but we're streaming live on YouTube, so if you're in the chat, please say what's up. Tell us where you're from. Tell us what you're doing. And, yeah, come party with us here for a half an hour on the Tasty Crypto Show. Got a lot to talk about. Of course, we're going to talk about the Federal Reserve and its 50 basis point, what some are calling super cut. Glenn,
super cut.
What do we see? First, let's start with what we saw around TradFi, as we like to call it, traditional markets. Where was the biggest response, especially off of the FX desk?
Yeah, I mean, there's a pretty strong overreaction, it looked like, especially if you're looking at that U.S. dollar. A lot of weakness off the announcement, off the super cut. But then when Jerome Powell came up and quelled some out-of-the-box thinking, we saw a big bounce back in the U.S. dollar. So that had some good back and forth. Stocks, initially thought maybe supercut good news, and then decided they didn't really know what that meant long term. Same with gold. Gold's still down, I think, now. So yeah, definitely an interesting reaction. Headline supercut. You dig through the noise. What actually happened? Looking like maybe the long-term interest rate higher than expected, and this supercut is not the standard pace. Powell definitely made sure to let people know that don't expect supercuts every time.
Yeah,
this is a treat. If
he's trying to thread the needle.
He's threading the needle, and he's pretty good at it. Trying to land the plane here.
He's the best.
Some say.
Yeah.
Some say the best.
Yeah, quite the initial positive response, which sometimes is surprising. Going into this, there was maybe a 60% or so, close to it, probability of that 50 basis point cut versus a 25 basis point cut. You saw equities rip higher, so a nice response in crypto as well. Dollar weakness, as you mentioned, and now here we are. 30-year Treasury bond futures down about a point. 10-year note futures down not quite half a point. Oil's a little bit lower by about a percentage, so it's about 81 cents here. Looking at the futures market. But crypto, 60,000 on Bitcoin, Glenn. Are we back? Are we so back? How are you feeling about this?
I definitely can't say so back. We might be back.
Okay.
We might be back. Crypto likes supercuts traditionally. Has crypto even seen a supercut before?
Well, we're going to take a look at this. If you were watching the show on Monday, we went back and just tried to do a bit of analysis, and I kept referring to it as surface level because we didn't dig into the details, but basically looked at the last 15 years or so and just tried to determine, is it a low rate environment that crypto likes? Are high rates a negative for crypto? And there really isn't much that drives it outside of what's happening specifically in the crypto markets if you come at it from the rate lens. Obviously, liquidity matters. We didn't really touch on the fact that at some points, you not only had low rates, but you had the Federal Reserve buying $100 billion or more in treasury bonds and mortgages. So there's a lot more that goes into it, and I think that was the main takeaway. It's not just interest rates. Today, and we'll get into this in a moment, I want to look at, going back to 2018, what the reaction has been following interest rate hikes on a meeting-to-meeting basis. Yep. The few times that we've had cuts, see if there's anything that we can derive from there. And if anything, maybe look at whether or not, most of the time it's positive, most of the time the response is negative. We're going to dig through that data in just a second. We're going to go through our performance dashboard in a moment. But before we do, we got some people showing up in the chat. Always appreciated. Lone Sophos, Jay Wright from Atlanta. What's up? And
here we go.
The infamous Mad Mike is making an appearance. I believe this is Michael Martin.
Could be an impersonator.
Mad Mike.
Could be the real, the one, the only.
A friend of the family, a friend of the show, a former employee. Mad Mike claims that the sell-off will continue beginning tomorrow afternoon. Tomorrow morning, the sell-off will continue. Tomorrow afternoon, though, we will begin a new bull market. And he has spoken. Mike dropped there. We'll see. But yeah, sometimes with these, and I was commenting to Lawrence across the desk for me today, sometimes you want to fade the initial response, whether it's ripping higher or it's falling lower. Quite often, once Jerome Powell comes out with the press conference, you get a reversal in the market. He says something that maybe people don't like, or just takes a little bit of the wind out of the sails, right? And some of that enthusiasm is gone. But I wouldn't read too much into the initial response here, though I will say, for us, Bitcoin above 60 feels a little bit better.
Yeah, I mean, I was surprised, though. This is the first meeting in recent memory, at least, where something wasn't, the outcome wasn't fully priced in. I feel like they're very meticulous about not shocking markets. So even though, we've seen kind of a announcement, press conference back and forth before, I thought there would be some sustained momentum from the super cut as opposed to normal cut. But we'll never know.
Yeah, first time in, I believe, 4 years that we've got an interest rate cut here. We've been on hold for quite some time, the majority of, into the end of 23 and obviously up until this point. But 50 basis points ahead of the election. Some people may be reading into that. The Fed says, no, we're apolitical, had some good discussions. The economy is strong, though, Glenn.
He said we're in a good place.
It's very strong. We're just, we're not behind the curve. We're just going to do the 50 basis point cut. Don't expect more in terms of 50 basis points every single time. But what I've found interesting, we'll touch on in just a second, is that, you don't often, at least, going back to the great financial crisis, you don't really get these massive rate cuts all that often. The most recent being COVID, 50 basis points or 75, then 100 down, basically taking it to zero. And so a lot more going on in terms of price action. I don't think it was rates that was driving anything one way or the other. That was just the reaction. But I think more so it's, where are you for that then sustained period of time? And does the market get used to that, right? Because we saw, as we talked about on Monday, higher rates, maybe initially acting as a headwind. But once we got comfortable with where we were and nothing really broke or fell apart, prices moved higher based on what was happening in those specific markets. When you look at crypto, you look at the Bitcoin ETF. Right. And then on the other side, you might see the Fed lower rates in some cases because there's an economic emergency. But eventually we work our way through that. And then that lower or zero interest rate policy has been in the past. I'm not saying that we're going back there, but during that period of time, it was pretty beneficial for assets in terms of asset price inflation. So it's not so much the decision and what happens today. It probably doesn't matter as much.
Right, but I thought it was important that during the press conference, someone actually did ask, and he did kind of allude to the fact that ultra low rates that we've seen before may not be in the cards this go round. Them bumping up the long-term projections and trying to decide where that long-term neutral rate is might be close to 3%. So I don't know how many more super cuts are in the cards.
We shall see, and they, as always, remain data dependent. We're pretty data dependent over here as well.
Oh, yeah.
Ready to get quanty? My quant friend?
Let's do it.
Let's pull up the slides.
Sleeves
take a
rolled.
look. Yeah, I see that. That's nice. You're ready for work. Got the watch on and everything.
Yeah, heating up.
Nice. Looking at our performance dashboard, a little bit of green on the screen for Bitcoin, but everything else still can't get off the floor. Right?
What the heck, Ryan?
ETH has been trading terribly. We track Litecoin and Bitcoin Cash. You can trade those through the tastytrade brokerage, as well as Bitcoin and Ethereum. And we like Solana. It's a personal favorite of ours. Yeah. So we have it up here as well. But you can see the response was largely in Bitcoin. Volatility's come in a little bit. Bitcoin at the time, I've got, I think, a little bit lower price right now. It's obviously whipping around. But when I ran the numbers just a little while ago, 61.2 put you up about 6% on the week. And we know that these are pretty standard moves. 5% is nothing. 5% in 5 minutes is nothing. But what I found interesting is that we have recovered a little bit of the momentum.
Yep.
So we've got the daily back in the green. If we look at the exponential moving averages, the kind of concerning breakdown that we saw at the beginning of the week, recovered. So there can be a lot of noise in these. Mm-hmm. Obviously, they're backward looking. Things can change. But if you want to try to stay on the right side of the trend, I think what I derive from this is simply that, again, as we've talked about on almost every show for what feels like months now, it's been Bitcoin over everything. There have been trades in other areas at times, but that positive or bullish momentum remains in Bitcoin versus most of the rest of the market. And you see that with Bitcoin market cap dominance now over 58%. Pretty big move here today versus everything else.
Yeah, and we've covered in some of the rate talk, we've covered how much macro matters, and we're still seeing just moves in Bitcoin. At what point do you think we see Bitcoin leads, everything else follows? Because that can happen, traditionally that has happened, but really not as of late.
If I had to put a time frame around it, I think it's into 2025. I think it's certainly post-election. I'm sorry, Glenn. It's just that there's uncertainty, and we're not at that point in the cycle where it's buy everything, close your eyes, and wake up a gazillionaire, right? You're certainly not seeing it in terms of performance. Momentum isn't there. But we're just not seeing, we're not seeing huge flows into Bitcoin ETFs either. Some of these things, it's positive, but have slowed down quite a bit from where we were at the beginning of the year. And I just don't think that there's, an appetite to take that kind of risk given the volatility that does exist in some of these smaller market cap tokens, in, some of the meme coins. I think you will see it if this cycle plays out as they have historically, but it's not today. That's for sure.
Yeah, definitely. The actual real term, how consumers feel these rate changes, especially as it relates to risk-free assets. I anticipate there will be a lot of delay there into when people are moving their money out of those savings accounts and back into those Bitcoin ETFs.
Yeah, as we talked about on the show on Monday, you're definitely going to see, if as rates go lower, money flow out of money market funds, short-term treasuries, and into risk assets, whether it's into Bitcoin or not. We'll see. Presumably, some money will make its way in there. But I think you need more certainty out of what the rate cut cycle looks like at this point. What's the size of the cuts and what's the reasoning behind it? What's the economy looking like? What does the election outcome look like? And I just don't think, again, that, ahead of all of that, given that uncertainty, you're going to take, a lot of risk in some of these things that, who knows if they're going to be around, right? You're just not necessarily going to speculate as much, in my opinion.
A lot of powder still on the sideline.
That could be a positive. It just isn't, again, happening today, but could show up and definitely support markets going forward. That said, volatility has come in slightly. Not much of a move here. If you watch the show on Monday, ranges still right around where they've been, though, that range resets, especially with Bitcoin. We've got a higher high there and a higher low as it's trading to the upside. Ethereum still kind of right where we were. So if you're creating a liquidity pool in ETH, USDC, like we have live right now, this is the one standard deviation move. This has worked. We haven't really broken out of those ranges, as we've talked about kind of ad nauseum.
Still chopping.
Yeah, and really no change whatsoever, really, when we look at Bitcoin Cash, Litecoin, or Solana. Those expected moves are just about the same as they were, and ranges are roughly the same as they were when we were looking at this on Monday. That said, just a quick look at correlations here, just given how everything's kind of been trading together with this macro backdrop. Short-term correlations have come down a little bit, but still, I think it's the same trade. We saw that today, right? The response in the S&P and the NASDAQ was straight up. The response in Bitcoin was straight up. I would be a little bit more concerned if, we came out, we do the 50 basis point supercut, and crypto just dumps. Equities up and like get me out of Bitcoin, right?
Dear Ryan, what is going on?
Worrisome. Yeah. So didn't see that, again, reflected here in the correlations that we track. I try not to read too much into this, certainly backward looking, but kind of tells you at least where you are, and the way that we approach all of this, whether it's momentum indicators, is trying to track the trends, is trying to look at correlations here, or just even measuring, what are the expected moves with volatility. This is your dashboard. You're driving the car. You're trying not to crash. You need to know certain things, right? What are the weather conditions? What's the speed that you're going? What direction are we traveling in? This is what we use this for.
What's the Prius in front of me going to do?
Exactly.
How hard are they going to brake?
Now, some things you can only anticipate. You might have to guess, and sometimes we're right once in a while. We'll see.
Right. In the future, sometimes.
So,
maybe.
Glenn, I guess we
haven't been right.
I'm sorry about dogging me, my friend.
I made my own decisions, but you did kind of lead me astray in the dogging me.
Well, you hold it long enough, it'll go back.
Oh, I think I have like 20,000 dogging me's.
Maybe.
Dogging me coins.
Yeah. Let us know in the chat what bags are you holding. I'm always interested in what people are invested in, because we've been in a lot of stuff. A lot of things have worked and a lot of things haven't worked. Hopefully, you have more winners than losers at the end of the day, and the winners are bigger. That's actually the key. You can only you could have 2 winners, but as long as they're exponentially larger than your losers, you're okay, man. That's like the VC approach. You're like a VC, Glenn.
Yeah.
Like a quant, a VC. You do it all, man.
VC quant.
We're having fun. Let's take a look at interest rate reactions. So the catalyst for this was the Cherry Picks email, which is a fantastic email from the good doctor, Dr. Data, and Nick Batista. They put this together. And ahead of the Fed, they put out the most recent Cherry Picks looking at the reaction in equities on a 1-day basis, 3-day basis, all the way up to a few months out. How do things perform when the Fed hikes, when they cut, when they hike by this much, they cut by that much. And I wanted to take a similar approach and kind of follow on to what we talked about on Monday, where we were just looking at the environments on average, right? Low rates, high rates, et cetera. So let's take a look at, and I know there's a lot on the screen here, so bear with me. There are clearly other points in history where the Fed has made an interest rate decision. We, certainly have seen
a little asterisk.
Yeah, a little footnote here.
Other rates not included.
But Bitcoin hasn't been around that long, and as we discussed on the show on Monday, some of this stuff is just kind of it has nothing to do with interest rates. And you look at the percentages, and it's tough to read into it because it was $5 and it went to 5,000. Okay, over a 2-year period where rates kind of oscillated in one way, So I want to look at 2018. 2023, clearly with this being the first cut in 4 years, we haven't seen a period where interest rates have been cut that much. It was COVID. It was emergency cut, emergency response.
Red button cuts.
And you look at this, right? So let's just focus on that one. March 16th, 2020, terrible day if you were in the markets. Federal Reserve cuts by 100 basis points. And if you didn't know anything else, you'd think, oh man, that's got to be amazing. Right? Assets are going to go straight up. Money is cheap. It's going to just flood into the markets. Well, no. This was in response to complete disaster. So the 1-day response in Bitcoin down 6.7%, it wasn't going to matter whether they cut or didn't. That's just what was going to happen. It was going down. It's going down by a lot. It went down by a lot more than that. So it's, not something you can read into too much on a 1-day basis, but wanted to look at this, right? And I think what kind of stands out to me here is that hikes or cuts over a long enough period of time, we know that this has been a pretty decent performer. We'll put it at that when you look at Bitcoin, and it's gone up a lot, right? And so I think it's tough to kind of just look at interest rates and say, okay, this is the key or clear driver. Certainly low interest rate environment and everything else that might come along with it, liquidity injections and those sorts of environments can be positive for asset prices and Bitcoin especially. We've seen that historically. But I did want to look at, just the response and just try to derive anything from here and stop me in my tracks if anything stands out, Glenn. But, when you look at this, it's tough to argue that there's much of a pattern here. We'll get into, specifically isolating those hikes and the few cuts and comparing those two periods. But, again, I look at this and I think we've talked to it at times where you kind of assume that, okay, yeah, if they do this, it's going to be good. If they do that, it's going to be bad. It just really isn't true. There's a lot of noise.
Yeah, and what I'm seeing here is that the magnitude especially doesn't matter a ton, whether it is 50 or, I'm seeing some super cuts on here, a full basis point.
Yes.
Or a full point. But yeah,
that's a monster cut.
That's a monster cut. But yeah, on that monster cut, I am surprised how quickly Bitcoin came back. You talked about just how situationally it was kind of a doomsday, but 7 days later turned around and was flying by then. So yeah, you got to take in so much situationally. But yeah, probably just the scope of the cycle. If that changes, perhaps, like when you had that 100 basis point move lower, that was consensus about it, right? you're down to zero. There's nothing else. It kind of reset the playing field.
Yes.
Whereas in a lot of those hiking cycles, it's like, ooh, how high can it go? And adjusting expectations there. And just like we're doing now, where it's how low can we go? Where does the plane land? So yeah, you got to take it all with a grain of salt. But
yeah, I mean, you'll hear people talk about this, right? Where, what do people hate in terms of markets? And it's just uncertainty. You know how to trade a market that's trending to the downside and how to participate, or
That's
what
what pays you.
positions you want, right? Or to the upside. And I think, again, you want to just try to, in this case, especially with an asset like Bitcoin, where I would argue, we try to point out some of the fundamentals at times that might support the investment thesis, but it trades pretty technically. And I think you just need to stay on the right side of the trend, which is illustrated just by the size of the bullish moves here or the bearish moves. It's not so much up or down that stands out to me. It's that on that long enough period of time, it is an asset that is very trendy in nature, right? You see this in currency markets too. If it's going down, it's going to continue to go down, obviously, until it isn't. Whatever reverses that, whatever catalyst that is in the markets, eventually it shows up, right? I mean, that's just how things trade. Those are markets, but these aren't like, oh, it's green after 180 days. No, it's up 50% after 180 days. It's down 50%.
Right.
It's up 30%, and it speaks to the volatile nature of the asset class. But I think that's what really stands out to me here. If we just take a look at the whole thing and just kind of summarize it, here are the averages and then the median. And again, it's been pretty positive over time. You can, don't need me to tell you that. You can look at the returns. Percentage of the time, positive or negative, is also kind of 50-50. So I don't derive too much from there. It's not like, okay, the initial response is always down. No, it's again, 50-50. I mean, it's skewed here a little bit in the short term on that one-day basis to the downside, but that might just be because maybe the reaction to hikes initially is somewhat negative. And we've seen a lot more hikes in this period that we're looking at than we have seen cuts.
Yeah, and interesting, something I'm thinking of here is we've talked before about how in Bitcoin kind of volatility can be positive because it's going up. When things are crazy, it's going up more often than it's going down. But yeah, comparing these average moves to the median move, you are seeing the median's higher, and so when they are down moves, there are greater down moves than up moves. I think across the board here. So maybe that is a divergence from Bitcoin's typical behavior.
Yeah. In terms of what we kind of assume or we see on like a shorter term time frame.
When you're not just randomly picking random dates to kind of center around, but around these Fed decisions.
If we just look at hikes in isolation, again, the percentage of the time that it's positive or negative is still kind of wrapped right around 50-50, which speaks to a normal distribution, what you might expect. And I think, that would probably hold up over a much higher number of occurrences. We don't have a lot of occurrences here. So that's looking at what happens after rate hikes specifically. And then if we just look at those 4 cuts, which again, we've got to put some context around this. This was, the beginning of a cutting cycle as things were starting to slow. I think, there were some calls for we're entering into a recession. It could be entering into a recession into 2020. And then certainly in certain parts of the world in November, we saw the COVID outbreak. And then ultimately, it completely materialized here in the spring or in March. And you got those big moves there, overnight, really. And so that does need context. So percentage of the time negative. Well, again, it had nothing to do with rate cuts. It had everything to do with why are we cutting rates. But if you look at it, over a longer period of time, kind of 50-50. We just don't have enough data here. And I think, again, it speaks to the fact that we're just not often cutting rates because you're typically cutting rates in response to an economic slowdown or something worse.
USA.
Right. And so I think that maybe like when you look at what happened here today, clearly it was priced in. And many people would argue that the Fed is behind and has been too restrictive, and 5.5% isn't necessary, just given what we've seen with, let's say, CPI, with inflation, right? And growth has slowed down a little bit, and you've got some labor market data and blah, 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 blah. Jerome Powell said all of this earlier. And so maybe that's supportive of the 50 basis point cut. But again, typically you're cutting like this. And that's why maybe it was like, oh, super cut. Like, that's aggressive. Maybe you did 25, and if it does get worse, you do 50. I'm not in charge of the Fed, obviously. I'm here with my dopamine t-shirt. But I think that's what's kind of interesting about it, because you're either, boom, something bad happened, we cut, now we stay there for a while, and then eventually asset prices really like that. And there's also usually something that comes along with it, which is, I guess you want to call it some form of stimulus, but it's been in the form of what we refer to as quantitative easing. I think on 60 Minutes, Jerome Powell even alluded to the fact that we print money in some ways. But, those are the environments that I think that's where you kind of get really bullish. But at that point where, again, the unknowns are now known and there's less uncertainty. So we'll see how this all plays out. But, kind of ended up right where we thought we would end up. You're going to chop around like you do in wild fashion at times. And sometimes you end up right where you were when you started. It's nice to see, again, Bitcoin up a little bit here. But, I'm looking at the S&P futures up, not up yet until we open again, but closed at 56.89. And 3/4 of 1 point.
There you go.
Yeah.
Wish we had more exciting things to talk about on Super Cut Day.
Well,
more exciting price action. But
I think this sets the tone, sets the stage for more volatility going forward. I don't think it's going to be as quiet as it has been. Hopefully, we're in an environment that's supportive of prices.
Definitely.
Unless you have a short position on that I don't know about, Glenn. But no, it's going to be a bit more exciting going forward. But looking at this and just trying to understand, is there any real takeaway from a cut or a hike on a shorter period of time? What's the reaction been? It's been roughly split 50-50, and I would argue has almost nothing to do with that initial hike or that cut or what happens on that day. We'll forget about this in another week. We'll be talking about something else driving act.
Right, yeah. And it's interesting because maybe that's a job well done if things aren't moving, shifting crazy around something that could be seen as arbitrary, like the actual decision day and where the economic landscape actually ends up. Interesting to see if that around the election as well, if in lieu of these major moves, if everyone's waiting for something like the election or like we had with that vol quake around labor market data, just what will people react strongly to?
Yeah.
As we try and figure out.
Well, I think, again, that'll be an environment where it whips around, but at the end of the day, once you get past that event,
still back.
Farther out in time, it matters much less than obviously it did. That said, Glenn, before we wrap things up, if you haven't signed up for the Tasty Crypto weekly email, we send it out every Saturday morning. I think it's a pretty good newsletter.
I agree.
You like to read it?
I do like to read it.
It's got Glenn's stamp of approval. Go to tastycrypto.com. Sign up today, or you can sign up in the Tasty Crypto wallet app, which is available for iOS and Android, and also as a Chrome browser extension. We've got some fantastic updates that we've just launched. We're on Solana. We've got more coming soon here, hopefully in the next couple of weeks. So stay tuned. But that's going to do it for our show. Victor Jones is up next with the Price of Truth. Glenn and I will be back on Monday. Until then, thanks for watching. I'm Ryan Grace.
I'm Glenn.
Peace.